Good day. Good day. Thank you for having me to be part of this event with you. Uh, it's good to think investment. So I'm going to begin as I was asked to speak particularly on the interest rate trend. So there are actually two things to look at when we look at mortgage interest rates. One is the variable rate, the second is the fixed rate mortgage. Now, the trend is different for both. In other words, the variable rate may be going up or down, while the fixed mortgage rate could be going the opposite directions. The two are not directly related. Let's take a look at variable rate. This includes the adjustable rate mortgage as well. This rate is benchmark of the Bank of Canada prime rate. So when you hear Bank of Canada either going to increase or reduce the interest rate or the prime rate, this would affect your variable rate. So often the rate you hear what Bank of Canada said is a little bit different. What we look at is the mortgage prime rate. So currently, the mortgage prime rate is at 6.7%. Now, often your banking institution will give you a discount. That depending on many factors, but typically there is a discount, and the pricing is based on prime minus certain numbers. So prime minus 0.1%, I'm sorry, prime minus 1% is quite common. Now, of course, there are times that they charge prime plus, but either way, the prime rate dictate what your mortgage rate is as it fluctuates up and down. Fixed term, on the other hand, is not dictated by the government, but rather by the stock market. So fixed term usually are the terms that we look at, like a 1 year, 2, 3, 4, 5, 7, 10-year mortgage term that we can have here in Canada. It's like a contract that lasts 3 years or 5 years, and this is often benchmark of the bond yields. So if you want to know the trend of the fixed term, you have to study the yield. You look at the yield, for example, a 5 year bond yield, you have to add maybe 1.5 to 2%. Now, these are approximate figure. Sometimes they're more, sometimes they are less, because we have to pay the investor the at least the bond yield amount in order for them to buy the mortgage-backed security. So here's a picture or a chart of what current, this is as of today, June the 1st, as I am getting this off the internet there, that the going rate. So you can see it fluctuates. A few days ago, a 5 year rate was 3.57. Today it's back down a little bit at 3.42%. So at 3.42, it doesn't necessarily mean they're going to use this as the rate, but this put a lot of pressure and influence on it. And if we were to take, say, this rate of 3.42 and add 2% to it, so it will be 5.41. That would be a fair rate, whether it is so today or not, because often they don't change the rate as that little bit of movement come and go. They look for the pattern. So this is how you can determine what your 5 year rate is. If you want a 3 year rate, then you look at a 3 year bond yield. Now, here's another thing. I just want to look at trend, because that's what we're talking. That's why I was asked to speak on this. Well, back during COVID time, we see that rate or the bond yield was very low because there was no confidence in the economy. So back at that time, the 5 year yield was down to like less than 0.5%, 0.4, 0.3 thereabout. So if you were to add, say, 1.5% as the margin, remember I said 1.5, sometimes 2 is approximate. So if that's the case, then that brings the mortgage rate to be under 2%. In fact, we were doing some 5 year mortgages at one point down to 1.5%. Now, in second quarter of 2022, we find that the interest rate changed. The 5-year rate shot way up because we were anticipating COVID is over, economy is going to recover. So from the 0.4% or so, it shot up to 3.75. That's almost 3.5% increase. Because of that, your 5-year fixed rate gone up accordingly. So if you add 2%, by this point the margin was tighter, it cost more to do things. So 2% plus 3.75, that give us today's give us the higher rate of around 5.75%. Let's focus a little bit more just in the last little while. So why did 5-year rate gone way up and then sometimes it seems to come down? Well, just last week alone, it gone up 0.75%. Why? Well, if you look at this graph here, we can see that the yield went from 2.8% in early May to 3.7%. This is more than 1% increase in less than a month. And because of that, they have to raise the interest rate in order to compensate the bond yield holder or buyers. So you see in the graph here, the 5-year rate from the beginning of this year to now has been a very mixed up and down affair. Very difficult to forecast, and looks like the trend is it's staying around this range. Is being up and down but pretty stable in a sense. So that's basically what the 5-year mortgage will look like. Now, just a little sidetracking a little bit, you folks are in for the investments. So I've been doing this now for 34 years, and my advice has been the same for the last 20-30 years. There are actually 4 steps or 4 secrets to financial peace. Now notice I said financial peace. I didn't say get rich overnight. You need to have financial peace. First thing you must have is to have a plan. Without a plan, nothing works. You need to know why you want something. You need to know the what, the how, the where, when, and so on. And then make sure you have manageable cash flow. Cash flow is everything. I don't care what you have. If you can't make the payment, you're in trouble. And then the third thing, we often only talk about it just as a term: pay the mortgage off. Big in a lot of people's mind. In fact, one of the bank at one point even termed the phrase unmortgage. I think it's a good thing to unmortgage what you have, but it's not always a good thing. You need to know, is it good to unmortgage, or maybe you can take advantage by not paying off the mortgage, which indirectly goes to a step number 4, is learn how to use your mortgage to make money for you. Mortgage is a debt, but if you use it properly, it could be an asset by making money for you. Now, before I close, I want to tell a little joke, if that's okay with you. And I know often people laugh before they even hear the joke, especially when we say blonde joke. So this lady went to the bank looking for a quick loan for only $5,000, but she needed the money quickly, like now. She pulled in with her convertible, and the bank manager look at her, look at her car, look at her again, and go, "Lady, you sure you want $5,000 quickly? You know, we just don't give money out like that. We want security just in case if you don't come back." She go, "Okay, what do you want?" He said, "Well, I want to take your convertible. That's a security until you come back." She go, "No problem. Take the keys. Here's the convertible." He looks at her again, thinking, "Wow, that was easy. I wonder if I can make more money on her." Looks at her, look at the chart on the wall that said today's interest rate is 6%. Look at her again, they go, "Okay, we're going to charge you 24%. Now, some of you who are listening to this story are probably going, "Wow, this is highway robbery." The government do that when they hear extra high interest rate, they freak without telling the whole story. She didn't. She go, "Okay, I'll pay you the 24%, signed the paper, took the money, and left." And I can picture this. The manager probably called his assistant manager over and said, "Here, take this car downstairs, park it in your spot, make sure no one scratched this car. It's good security for only $5,000 loan." He probably walked away smiling, thinking he had the best deal of the week. 5 days later, she came back to pay the loan off, to get her car back, obviously. Now, come to calculations. She owed $5,000 at 24%. Well, if you take that, divided by 365 days, this is how we work out what we call per diem. The per diem is $3.29 a day. Owing that for 5 days is $16.44. She paid her $16.44. She gets her car back. At this point, the manager was quite puzzled. He looks at her and say, "Lady, you must have good mean with money. I'm just curious, why do you need money so quickly and willing to pay such a high interest rate?" She looked at him with a little smile and said, "Where else can I have my car securely parked for $16.44 for the day?" Now, there's a reason I told you this story, because you want to become investors or are investors. So I want to stress the point. Interest rate is not important. What you have to learn is the difference between interests that you paid versus the rate itself. So take a look at this story again with this blonde lady. She paid an interest rate of 24%, which sounds so high, but the actual interest she paid is only $16.44, and they securely looked after her car for 5 days. So who's the winner at the end of it all? So I trust that today it will be profitable for you, and the lessons learned could be something you can use for life. Thank you again for letting me share this with you. Bye-bye for now.